Stocks slip as uncertainties rise over the policies of US President Donald Trump may adopt in his second term and how the US Fed will move on rates at its meeting tonight. Auto, IT and metals are the big drags.
Apollo Hospitals beats profit estimates, riding on healthy growth across verticals. Arm Apollo Healthco reports a profit versus a loss last year. Healthcare major expects steady occupancy with higher revenue per bed in the second half of the year. The stock rallies.
Hindalco is the top Nifty loser after Novelis withdraws its short-term EBITDA per ton guidance after a weak quarter. High scrap prices on increased purchases by China impacts the business.
Morgan Stanley increases India's weight by a tad under 20% in its emerging markets index. This move could lead to an inflow of about $2.5 billion, of which HDFC Bank alone could account for $1.7 billion.
The rupee is down over 0.25% in the last 2 days, but is still the best performer in Asia, with currencies from the renminbi to the yen to the won falling between 1.5% to 2.2% of fears of tariffs from Donald Trump.
You're watching us here on Halftime Report. Same time yesterday, there was a big up move in the markets, but right now it's a day of moderation. We're seeing some of those gains given up for the frontline indices. And right now, the Nifty is holding with a cut of almost 275 points, a little above that 24,200 mark. The mid-caps fare a tad better. I'm Mangla Malu. With me is Hormaz Fatakia. Hormaz, from the lows, we saw a big rally. From the highs, now we're seeing a bit of a decline.
We're seeing a bit of a decline, right? Important levels coming into play as always. Last week's high of 24,500 again proving to be a hurdle for the Nifty. And the IT names that were the top performers yesterday are giving up some of their gains that we had seen. But the top loser in today's trading session is Hindalco. And that after Novelis cut its short-term EBITDA per ton guidance as well after a weak quarter. On the flip side, Apollo Hospitals is the top gainer on the Nifty, 8.5% lower there on Hindalco, and Apollo Hospitals now 7% higher. You heard from the management as well. But some important news flow that came in earlier this morning, that the MSCI has announced the results of its November review and will be adding 5 Indian stocks to its global emerging market index. Vivek, the birthday boy, is joining in here with more details. Vivek.
Well, that's right. So MSCI very early today morning announced the results of the November 2024 index reviews. Now, as part of the MSCI Global Standard Index, the index where there will be the most amount of liquidity and the one that is tracked the most closely, there are 5 inclusions this time around. Most of the inclusions are largely along expected lines that quant analysts were penciling in. Now, as per IIFL Alt Research, the flows that these 5 stocks will see are Voltas, BSE, Alchem, Oberoi Realty, as well as Kalyan Jewellers, are the stocks that have made the cut this time around. The flows will come in on November 25th. Now, one stock that hasn't made the cut this time around, although it was eligible, was actually Adani Energy Solutions. MSCI is awaiting for further clarity as far as the free float is concerned to go ahead and include this particular name. HDFC Bank is the other stock in focus. Remember, after the merger of HDFC Limited and HDFC Bank, the second tranche of the inflows, the first tranche happened in the August review. The second tranche of close to $1.7 billion is expected to happen in this particular tranche itself, or in this particular index rejig. So totally, India is expected to see flows of close to $2.5 billion, and India's weightage in the MSCI Emerging Market Index rises up to 19.8%, the highest on record. So interesting development, and it's a net inflow event as far as Indian equities are concerned.
All right, net inflow even as the Indian equities are concerned. Right now, the Nifty slightly shy of 300 points on a cut is what we're seeing, though the broader markets would have you believe that there is a more, there is a lot more parity out there. There are equal number of stocks which are advancing versus the stocks that are declining. Among the stocks which have moved to the high point of trade right now, we actually just keep an eye on Trent. Trent is one of those stocks which is under a bit of pressure right now. From the highs, it's corrected about 17 odd percent. Not something that you associate with a stock like Trent reporting its numbers today. So we'll keep an eye out on that. The street expects a near 40% revenue growth this time around. But speaking about results, Tata Steel, another Tata Group company, reported its second quarter results. The EBITDA per ton came in much better than street expectations. In fact, Nigel D'Souza caught up with TV Narendran and began by asking him about the quarter gone by and how Chinese prices have moved. Have they bottomed out? Listen in.
I think if you look at the Chinese prices, it had actually gone down to about 450 levels sometime in the middle of the last quarter. Since then, it picked up, crossed 500, dropped a bit below 500. So it's higher than the lowest it had hit a few months back. but still not where it should be. So I think it's hovering in the 480, 500, 520 range, and we're looking to see what happens going forward. The Chinese government has announced, another stimulus, so let's see if that has an impact. But exports from China continues to concern us. In September also, they exported more than 10 million tons. So think it's bottomed out, but we want to see more evidence to that.
And what about pricing for you? If I compare Q3 pricing in comparison to Q2, there are a couple of price hikes that are pushed through. So what is the difference?
Yeah, so we have pushed through some price hikes, but still, if you look at the July prices, they were much higher. So on an average, we are expecting this quarter to be about 2,000 rupees lower than the average of the last quarter.
All right, 2,000 rupees lower. That's for the India operations or for on a blended basis?
That's for the India operation.
Okay, all right. What about coking coal costs then? You were hinting that you should get a benefit of around $20 per ton in the past quarter. Did that come about? And for Q3, will it also be lower?
Yes. So last quarter, we had a $20 reduction as we had guided. And for this quarter as well, for Q3 as well, we expect coking coal consumption cost to be about $20 per ton lower in Q3 compared to Q2.
Okay, all right. Let's focus on the India business then, because you'll get a benefit of lower coking coal costs, which was down by $20. Another $20 is what is due. But you're also telling us that on the India business, the pricing will be lower. So how does it shape up? What is the trajectory with regard to the EBITDA per ton for the India business?
Well, EBITDA per ton for the India business, I don't want to give you a specific guidance, but obviously there continues to be pressure. We're waiting to see how the rest of the quarter plays out. Some of the reduction in the realizations is offset by the coking coal reductions. But let's wait and see. I think it will not be higher, that much I can tell you. Let's try to see whether we can keep it as close to the current level as possible. It may be slightly lower.
Okay. And additional volumes, operating leverage could play out since you have commissioned one of your units. I think you were hinting at around 1.4 million tons odd volume, higher in FY25 compared to FY24. That's on course?
Close to that. I think what has happened is in India, the blast furnace has started. So we're expecting at least 1.1 million tons additional from Kalinganagar. We're getting another 200,000 from Nilachal, but we have a shutdown a blast furnace shutdown in India. One of our blast furnaces in Jamshedpur needs to be taken down for relining. We're trying to see how much that can be pushed, and that will have an impact on the volumes. But we are between 1.1 to 1.4 in that range.
Got it. What about the European business, Netherlands? The EBITDA per ton will continue to improve from here. And is the UK business heading to a neutral kind of scenario by the end of this fiscal?
So I think you will see an improvement in the EBITDA per ton in Q3 in UK compared to UK in Q2. Netherlands may see a deterioration, not for anything else, but for the market conditions, unless the market changes significantly in the next 45 days or so. So while the production side is okay in Netherlands, we're going to be producing 2 million tons more this year than last year in terms of production. But I think the markets continues to be challenged, particularly because of the problems in Germany, and that's the biggest market in Europe. UK will see the benefits of, the reduction in fixed costs, because now we've closed both the blast furnaces, but that got delayed, not the closure, but the separation packages got delayed by a few months because of the elections in the UK and the discussions that we had with the new government. But I think now it's on course. And as we had guided, we will start seeing the EBITDA per ton in the UK improve here on, and hopefully come to close to a neutral level by the end of the year.
Well, the net debt numbers making your shareholders a little bit uncomfortable because it's at around 89,000 crores, and the net debt to EBITDA as well has moved up. You had hinted in the past that you expect the net debt to EBITDA to come down to around that three times odd. Do you think that will happen by the end of this fiscal? And what is the absolute number on the net debt? Will it continue to move up from here?
So we are at around 88,000 crores. As you've seen, it's higher than we would like it to be. We've taken out some of the capital from the working capital. Obviously, we are working to see how we can improve the EBITDA. The EBITDAs have been much lower than we had anticipated because of the market conditions. But yes, we want to work on bringing the net debt to EBITDA to below 2.5. That is the target that we are chasing. But yes, market conditions are not very helpful at the moment. So we are taking actions on what's in our control, which is more on cost takeouts.
So by when does it come down to 2.5?
Well, we are not giving up on that number. Let's wait and see in the next couple of quarters where we get. Yeah.
The other big headline from a global perspective is that the United States is going to have a new president, President Trump. It'll be interesting to see how he disrupts the entire supply chain as well as the demand factors. Could you tell us what kind of impact do you see for Tata Steel? And as of now, how much of steel is exported to the United States?
Currently, we sell close to 1 million tons, mainly from Europe into the US. Most of it goes from Netherlands. I think about 700,000 tons goes from the Netherlands. Rest of it goes from the UK. But a lot of it is steel for packaging, steel for high-end auto. So it's steel which is typically not made in the US. But yes, we're waiting to see what are the trade actions, if any, Trump will take. More importantly, what action is he going to take on China? What will the impact of that be on the Chinese economy, on the Chinese exports? Will Chinese steel exports continue to flood the Southeast Asian markets as we've seen, and the impact of that? So it's going to be a watchful time for sure. We need to see what's happening. But the other side of it is, I think Europe will invest more and more in taking care of their own destiny. And that means investments in Europe hopefully should increase. And that's good for us in Europe.
Okay, all right. Talking about protection, what about the Indian government? There has been a plea that's been made to increase duties and protect the domestic steel industry. What level of duties would be satisfactory according to you and be enough to protect it from imports at current pricing? And have you heard anything that it could be levied sooner rather than later?
Well, we continue to represent to the government. They are looking at it. I think they have their own concerns, which they will need to address. But I think the larger point we are making is this is one of those sectors which has really announced a lot of private sector investment. I think the steel industry, between all the steel majors, have announced more than 100,000 crores of investments. So it's an opportunity for the country to get the private sector investment back on track. But I think if imports continue the way it is, if steel prices continue the way it is because China is exporting steel despite losing money at those prices, then it will derail the investment plans of the Indian steel industry, not just Tata Steel, because ultimately it's not just about demand, it has to be profitable growth. Otherwise, where do the cash flows come from to make the investments? So I think that is a message that we are conveying, we are representing to the government. And you can see from the results of the steel companies in India that margins are shrinking, and that means cash flows are shrinking. So the investable surplus will reduce if this continues for very long.
Okay, and what level, what kind of duties would you expect?
I think, like we did in the past, one is to say, can the basic customs duty be increased from 7 to 15 or whatever? But if not that, some safeguard duties. Something needs to be done fast because, other countries have moved fast. The US have already imposed duties. Canada has imposed duties. EU is doing so. So the longer we take, the more the damage that is done. And, we should not forget that when steel prices went up, there was an export duty. So if we can't ride the upside when steel prices go up, then we certainly need some support in the downside.
The management of Tata Steel, but numbers coming in thick and fast. Both the Nifty companies expected today, Mahindra and Mahindra and Trent, both have come out with their numbers. We'll get to Trent in just a bit, but Mahindra and Mahindra numbers are flashing on your screen in just a few minutes. Earlier, the net profit up 13% from last year, marginally higher compared to estimates. The revenue too growing by a similar quantum, up 13% at 27,553 crore is what the company has reported. The EBITDA at 3,903, also marginally higher compared to estimates, and the EBITDA margins at 14.2%, also 30 basis points higher than what the poll was estimating at 13.9% for Mahindra and Mahindra. The farm equipment revenues were up 10%. Its EBIT was up 20% from last year. The margins have gone up 150 basis points to a 17.5% figure from 16% last year. The company's market share, though, in the SUV segment has gone up to around 21.9% at the end of the quarter. We have Abhishek Gaushinde of Sharekhan by BNP Paribas and Prakash Diwan, who are also joining in to discuss the numbers for Mahindra and Mahindra. Abhishek, how do the numbers look like prima facie? Most of them have been higher on most fronts.
See, broadly, what I feel that the numbers in line with our estimates, but what I would like to highlight here is that it would be a combination of two things. One is the seasonality factor, and second is the underlying improvement in the individual business. So for example, this quarter used to be a weak quarter for a tractor business, and that has somehow impacted its overall volume growth, or I can say that the revenue growth. But given that what I'm inferring from the number is that the underlying profitability of the individual segment has been improving. That's why EBITDA, absolute EBITDA and EBITDA margin are coming close to our estimate. So, say for example, last year in the same period, the company has witnessed almost 200 pips kind of a contraction in the EBITDA margin, but on a QQ basis. But in this year, it would be merely 60-70 pips kind of a EBITDA margin contraction in a weak period, which is giving a second inference is that the company is holding this 14% kind of a EBITDA margin range. One. Second is that its absolute EBITDA is also coming close to the 4,000 crore rupees per quarter. And so this is if we extend this, that in this year the company can easily report an EBITDA in the range of 15,000, 16,000 crore, which is broadly in line with the current estimates. And the bottom line, which is appearing to be higher than estimates, what I feel that it is being also due to the feasibility that in this quarter the Mahindra and Mahindra generally witness lumpiness in other income due to the higher dividend income from its associates and the investment. So in that case, number-wise, broadly, it's in line with estimates.
All right, we take that point. Thanks a lot, Abhishek, for joining in and giving us your quick view on M&M. Meanwhile, we also have numbers coming in from another Nifty company, Trent, and the stock seems like it is down about 3.5%, down 20% from its peak itself. But these numbers aren't bad. Yes, slightly shy of street expectations, but here's what the street expectations were, Hormaz. 45% jump in the revenue and over a 60% jump in the profitability as well. What has the company reported? 39% jump in the revenue, 41% jump in the EBITDA, and 47% jump in the profitability itself. So, the numbers are slightly shy of very elevated expectations itself. EBITDA at 642 crores, the CNBC-TV18 poll was 675 crores itself. There's a 41% jump at a time when all other consumer companies are speaking about weakness in the consumption sector itself. Trent has gone ahead and grown its revenue by 39%. Yes, a few basis points, below street expectations, but you have to keep the consumer sentiment in perspective as well. So 39% revenue growth is what the company has reported, 4157 crores. The street was working with a number of around 4,300 odd crores. 41% is the jump in the EBITDA, 643 crores. Here the street was working with a number of 675 crores. The net profit actually has been slightly below expectations, but that's on account of a couple of factors. If you look at, the overall depreciation of the company, that has increased, and that's largely because one of their, some of their storefront is increasing. Secondly, other income is down from 80 crores to about 47 odd crores. And thirdly, we also have the tax expense, which is up from 86 crores to 131 crores. So you account for all of that, that explains the miss on the bottom line. Operationally, it's largely in line, mildly below expectations, but that's only because it was extremely elevated expectations out here. We have Prakash Diwan with us. Prakash, we'll speak to you about M&M in just a bit, but Trent, 39% revenue growth at a time when everyone else is seeing consumer sentiment weakening. How would you read these numbers?
No, I think the numbers are far better than what could have been given the weak consumer sentiment in Bangladesh. And you know how other retailers have been struggling not only to improve margins but also to grow revenue. But what Trent has done tells you that the juggernaut is on, their expansion, their single store sales contribution, all of that seems to be absolutely in line. I really don't think there's anything amiss. It's just that the stock is trading at such elevated valuation that the expectations around it are always going to be very high. So vis-a-vis that, it's going to look a bit weak. But if you look at on a YOY basis how they've improved, it's dramatic. So I don't think there's anything to complain. It's just that the market will have to digest these numbers and realign with the thing because of the PE multiples being so elevated.
That's what happens, right? When the stock runs up so much, and then the margin for error basically is almost nil, right, Prakash? Because even after a 39% revenue growth, you'd see it fall short of expectations. What is it that you are expecting now from the company going forward? Do you see the execution needs to continue at this level as well for these elevated valuations to sustain?
No, absolutely. And remember, we've got the lab-grown diamonds bit also now becoming a vector. Of course, it's just early days for that. But as it kind of grows into a significant presence, there will be contribution coming from that side as well, at least in terms of revenue build-up. So you're right. Execution has been stellar. It will continue to be the pivot on which the growth hinges. But my sense is it's just the elevated valuation which was going against the stock. But the EPS growth will kind of help catch up to some extent. It still doesn't kind of become reasonable or come into a value zone, but at least there will be a catch up at lower levels of the stock and better improved EPS trajectory.
One of the metrics to look at, Trent, would not just be PE. You also have to look at the PE divided by growth, or the PEG ratio as one looks at it. If the company is trading at around 90 times 2-year forward earnings, growing EPS at around 47% itself, then the PEG ratio is at 2, which is still at par or better than a lot of the other companies which are trading at elevated valuations with not the EPS growth to show for. Thanks a lot, Prakash, for a quick take on Trent. We'll probably speak later in the day for your views on M&M as well. Take a short break now. Continue our coverage on earnings. Rajiv Juneja, who's the VC and MD of Mankind Pharma, joins in to discuss their numbers as well. Stay tuned. Welcome back. If you look at a couple of stocks on the frontline indices itself, Trent is now recovering from the lows, currently has recovered a fair bit. It's flattened out tad. Remember, when the company reported its numbers, we did see a sharp downtick on the stock. In fact, now the downtick continues. So after a bit of recovery, that's got sold into. It's down about 5%, taking its cut from all-time highs to about 21% itself. So we'll keep an eye out on this, slightly shy of elevated expectations, but definitely a lot better than what the consumer sentiment would have you believe. Speaking about numbers itself, let's get chatting with the management of Mankind Pharma. Reported a good set of second quarter numbers. Revenue growth was led by good growth in the consumer healthcare business and even exports, which grew by about 57%. So let's get in Mr. Juneja, who's the Vice Chairman and Managing Director of Mankind Pharma, joining in. Thanks a lot, Mr. Juneja, for joining in. I remember you had earlier told us that, growth drivers of the company would be the consumer healthcare business and exports, which will continue to expand given the sort of new launches that you've seen out there. The question now is whether this growth sustains or not. Second quarter, revenues grew about 13.5% on a reported year-on-year basis. But in that, the consumer healthcare business grew 20% and exports grew nearly 60%. So is this outperformance of both these verticals likely to continue?
Yeah, right from beginning, we have maintained our commentary like this, that last year we started the process of cleaning up the operations of our consumer business and did plenty of right things, carved out consumer business out of Mankind as a 100% subsidiary. That really shows our confidence in our consumer business. This business is closest to our heart, we have said a number of times, because this has given us a lot of name. And we still maintain that our profits would be, EBITDA would be 18 to 20%, and growth would be high teens, double-digit, high-teen growth. As far as export is concerned, we always have believed that if something is niche, something is complex, something is difficult to make, we'll go for export. So whatever you're seeing is not basically outcome of only one quarter. It's a practice and working and consistent working of last couple of quarters. Nothing happens overnight. So we basically maintain the same things again.
Mr. Juneja, good afternoon. Thank you for joining in. Would you not like to raise the guidance, sir? You've just made a big acquisition, that of Bharat Serums and Vaccines. How is that expected to aid your growth in the second half of FY25 and then going into FY26 as well? Because I can see you've mentioned that your margins can improve to around 29% by FY27. But what about the next 18 months or so?
We've just taken over Bharat Serum, it's too early to say, and it's always good to say less and produce more. I mean, we believe in walking the talk, but we also believe that when we surprise market respond back much better. Why Bharat Serum has been taken? Because we see that Bharat Serum has offered us high entry barrier products, unique products, patent products. They basically are adding so much of value to mankind. And when you have great products and our marketing muscles are amazing, this amalgamation will definitely yield us good top line growth and good bottom line EBITDA.
All right.
That's the kind of expectations we carry in our head. And we always believe that whatever we do in mankind, it's not on the basis of quarter to quarter. It's always long term.
100%. And that's something that, we've seen even in your chronic therapies. That grew about 1.3x versus chronic for IPM, 1.6x outperformance in cardiac, etc. as well. Chronic share from 28% in FY18 has jumped all the way up to 36% now. Where do you see this going as an overall proportion? Is there an aspiration that you have out here?
We learned about chronic segment a bit late, but once we learn something, we execute at lightning speed. So you're talking about this in last couple of years only, our chronic share has come from 28% to 36%. Our aspiration is like our peers, why not 40%, why not 50% in long term? On these lines, we are working, and we are very sure as the time will pass, you'll see whatever we're talking will come true. Because chronic has given us a lot of consistency. It adds to your profit, whatever prescription you add, that brings more growth. So we have a guild that we learned this a bit late, and that's one reason our efforts are always more towards chronic side. Plenty of things are happening in chronic side. In time to come, you'll see fantastic things, results, profits due to chronic in mankind.
Mr. Juneja, your exports business grew almost 60% during the quarter. What's the launch pipeline looking like right now for the future, for the second half? And if you could share some color on the export business for the second half as well, do you maintain this growth rate?
We have always said that growth will be double digit. Don't forget that our export base was low, and we always maintained that we will export only complex, difficult, where we can command some kind of a profitability, where we can command longevity, because export can be very glamorous, at the same time very dangerous as well. So we have learned our lessons. So we maintain a very sane kind of approach, mature approach, where we can sustain long-term goals of mankind to be met. So we say, yes, double-digit growth would be there, and good profit would be there. It's a continuous work in progress.
All right, continuous work in progress out there. As far as the consumer healthcare business is concerned, could you give us a sense of what are the new products which are in the pipeline? What are the sort of launches that one can expect? And your reach, how much are you increasing your distribution reach by out here? What's the expected growth?
So two things are there in export side. One, it is not number of new products only. It is basically what is the size of the product and how can you really make those big products mega products. That's one thing. And that can really happen by increasing this reach of consumer side. We are very strong in the rest of the country except south side. So we are now focusing towards south side and trying to find out the levers by which we can increase our reach over there, our share over there. This is one. The second basically is what we acquired one product, Nimulid, from Panacea, which we launched, and that has got fantastic traction. And of course, one more product we have launched, that is OVA News, because nowadays late marriages are happening. So internationally, couples are always in tension why they are not conceiving. This is one kit. You can test at home which are the 5 best days to plan your baby. This is also getting good response.
Right.
On these two products, we are focusing right now.
Right. All right, Mr. Juneja, I wish you good luck for the second half of the financial year. Thank you so much for sparing time and joining us today, this afternoon. That is the management of Mankind Pharma. The stock 0.5% lower off the highs of the day. Time for a short break. More on the markets and the F&O side on after this short break. Stay tuned. We'll be right back.
Welcome back. It's a near 260-point cut that we've seen on the Nifty itself. Currently, the Nifty bank down by almost 360 points. The stock of the moment right now definitely has to be Trent. It is the second biggest loser on the Nifty right now with a cut of almost 5.5%, closer to 6% post its results. If you look at the broader markets, however, that will have you believe that there is a little more parity than what the frontliners have behaved because, there are more stocks declining than the number of stocks which are advancing, but those lines are pretty close to each other. Just about 1,100 stocks in the green, 1,300 stocks in the red itself. Yesterday's high on the Nifty was very interesting because it coincides rightly with the 20-day moving average, telling you that on the way up, that would be a bit of a resistance on the frontline index. And even the Nifty bank right now where it is at is just above the 50-day moving average, briefly went below that. And there is a slew of support for the Nifty bank at lower levels itself. For the Nifty, the question is what happens today because it is also the weekly options expiry. The 24,200 put has been fairly active. And you also have the 24,200 call, which is equally active. Combined premium on both of them is around 50 to 70 odd rupees. If you look at, the range, those who had written that 24,200 straddle, which is a call and a put together, they're expecting 24,150 to 24,250 as the range on the expiry itself. In terms of stocks, we're looking at Escorts, which is seeing a lot of short positions being added, down about 2.5%. But Granules, that's an interesting one. Today has been a buzz for most of the session in the earlier part, but now is off the highs, largely because of the news that it may enter F&O ban. So open interest has now crossed the market-wide position limit of close to around 95%, and as a result of which, maybe the stock enters F&O ban today, which is why some of the pairing of open interest is taking place, and as a result of which, stock is off highs.
Some news flow coming in as well on Granules, right, with regards to that Gagillapur facility of the company, and the stock might enter the F&O ban. Mangalam, thanks a lot for that update. We'll continue our coverage on the markets. The Nifty trading almost 250 points lower, but time for a short break. On the other side, Manisha Gupta joins in with Chirag Thakkar, who is the director of the Amrapali Group. Stay tuned. We'll be right back. Welcome back. The numbers of Mahindra and Mahindra were just reported a few minutes ago, and pull up the stock as well to see how that is reacting to its numbers. I see a bit of a spurt, and then that recovery has been sold into. But Sudarshan is joining in to discuss the quarter gone by. Sudarshan, healthy numbers at the looks of it.
Talking just about the numbers, earnings are looking much better than estimate, and good parties, both the segments, auto and farm segment, both the segments have done well. And it's led by market share gains that company has reported in both auto and farm segment. First, we talk about the numbers. Both profit and revenue have increased 13% each. EBITDA has jumped 31% to rupees 3,900 crore, and overall margin has jumped almost 200 basis points and it has come in at 14.2%. Talking specifically about auto segment, auto business revenue has jumped 14%, EBITDA has increased 17%, and here also EBIT margin has jumped 30 basis points and it has come at 9.5%. For the farm segment, it has market share is highest at 42.5%, an increase of 90 basis points year on year, and farm equipment revenue has increased 10%, EBIT has jumped 20%, and EBIT margin here has jumped more than 150 basis points. So overall, very strong set of earnings in both the segment. Some of the highlights, if I can mention, company's number one player in SUV. In terms of revenue market share, its market share is at 21.9%. It has seen an increase of 190 basis points YOY. In farm segment, as I mentioned, market share is at 42.5%, an increase of 90 basis points. Even in electric three-wheelers, company says it's the number one player, and here the market share is 43.6%. So earnings are much better than estimates. It's much higher. Basically, it's seen a healthy growth year on year, but now all the eyes will be on demand outlook. What does company say also about the upcoming new launches?
Healthy quarter. All eyes on the management commentary now. Sudarshan, thanks a lot for that. Over to Manisha Gupta now for our commodity corner.
Well, thank you for that. And my eyes are on gold and silver because we've seen very sharp corrections come in for that one. Joining me now to take that conversation further is Chirag Thakkar. He's director, Amrapali Group. Chirag, hi, thank you for joining us. You know, it was 10 days ago that we were trading at ₹1 lakh a kg. We are trading at 90,000 right now. So it has been 10,000 rupees per kg of a decline that we've seen in silver. The global markets as well have declined quite sharply. So from $35 to 31 being broken on the lower side as well. Overnight volatility has been to the tune of 5 to 6%, while of course the markets were long and perhaps overheated and correction was coming. But did you expect such a sharp decline that we saw overnight?
So yes, it was expected as we saw a very major event which took place last night with the US elections. But at the same time, if you look at the current scenario since last couple of weeks, we have been seeing all-time highs coming in our local currency. At the same time, if you see there was a consolidation mode, it was last week we already started looking at the pullback in the gold and silver, both the prices. But at the same time, if you look at today, we have a Fed event in the later in the evening today, which is going to be a very major factor for the precious metals for the next month.
Chirag, how are you looking at the Indian buying now? Because at ₹1 lakh a kg, there was perhaps a bit of a decline there. But we also have a strong, very big wedding season coming across now in November, December. And that clearly gets stretched to Feb, March, April also perhaps. Are you looking at that buying coming in as prices have seen a decline?
Yeah, so we have already seen a great physical buying into the Indian markets when we witnessed our Diwali season, which has gone really well. Down the line, whole value chain, if I talk to the jewelers, if I talk to anyone down the line on the value chain, everyone has been on a positive note and there has been a physical demand. But at the same time, when this prices has corrected, people are still looking to buy at these levels for the long term. At the same time, if you see, we are at a nice corrected level and which can expect a nice pullback from here and there is a growth down the line a couple of months.
Chirag, there are reports, as you mentioned, that Diwali quarter, the Diwali week that is, has seen very strong buyings coming in, perhaps the best that we've seen in a decade or two. Would you allude to those numbers?
So if you look at the numbers, there's no scrap coming into the market. Whenever we saw all-time highs coming and hitting to the silver markets, we always see a scrap comes to the market and there is no as such a physical demand into the market. But if you see this season, we have not seen any scrap coming into the market. So there's a limited scope of a discount was there last week. But today, when we speak, we are at a demand. Physical market is commanding a demand of 15 to 20 cents over and above the price of the global market.
All right, so the Indian silver price is at a premium at this point in time. Chirag, if in sense of numbers, what is your sense on how this quarter could pan out in sense of overall demand for India, one, and what kind of total imports are you forecasting now for this year, calendar year 2024?
So I think if we are at the same price and as estimated, the Fed's going to cut around 25 basis points. If that happens, there'll be a pullback in the prices. And a major focus will be on the commentary done by the Fed later in the evening today. That's going to decide the horizon. But at the same time, if you look at the physical demand for next 2 months, we could see 250, 300 tons of metal coming in next 2 months for the Indian imports. And looking down to the fiscal year, we'll surely be averaging around 6,500 to 7,000 tons of total imports into our country.
And what's your sense also on the demand itself for this quarter now? Are you looking at 200, 300 tons imports that we're talking about? Do you see all of that getting consumed?
Yes, that will be consumed because we see there's a huge gap, and this is like a pure opportunity. Who has been tracking the silver prices, and I'm sure there are lots of institutional buyers coming in. There are lots of ETFs being gathering metal. So I think it's a very positive note for the silver, and we could see a physical demand for this quarter as well.
Chirag, what's your sense on prices then? Because a lot of people still maintain that going forward in the next year, 35, 40 could come back. ₹1 lakh is now becoming an immediate resistance, but a level that we could see come back in the next year as well. How are you forecasting, calculating your prices now for the first quarter of 2025?
I would see it touch again 100K mark, and if it sustains there, we could see it crossing $35 and maybe averaging it around $35 to $37, and we could also see a all-time high of $40 into the market.
Okay.
All right, Chirag, thank you so much for sparing time and joining us this afternoon. Manisha, thanks a lot for that segment as well. But the Nifty now down over 1%, 260 points down on the index, nearing levels of 24,200, giving up most of the gains that we had seen across the last day and a half as well. The PSU Bank Index is the only one that is holding on to some bit of gains this afternoon, around 0.3%. But the broader markets too, still flat, but below the flat line as we speak. The sector that is impacted the most today is the metal space. 2% down is the Nifty Metals Index. The Pharma Index too trading with losses of over 1.5%. Pull up Trent as well, and we'll see that reaction after its results. At one point was down almost 6% after the results, and now down 6.5% as we speak. That slight recovery that we have seen after the results has been very promptly sold into. But with that, it's a wrap on this edition of Halftime Report. Business Lunch takes the action forward.